All right, friends, Chris Crone here with Limitless Wealth TV, and today we're talking about the best markets to invest in, specifically Indianapolis. All right, so we're here to talk about the best markets to invest in, and today I want to talk about Indianapolis. And why Indianapolis? Well, I want to share with you that when you get your real estate operation big enough, like mine is, to really do nationwide investing, the reality is most markets are not ideal markets to invest in. Often, your backyard is not the best place to invest in if you have a high cost of living, or if you're in an area where real estate has just jumped in value and you're like, Chris, how do I buy a $500,000 home in San Bernardino? Chris, how do I buy $1 million home in New York? And the reality is, if you're in any kind of market like that, I don't recommend that. I recommend that you go where the markets are hot. That doesn't have to mean get on a plane, because all of a sudden that becomes really unrealistic if you're a brand new investor. In fact, a lot of people that come and click on our website up here, one of the things that they realize is we can show you how to invest successfully in your backyard using like my lease option system, or access my personal power team, and we'll take you to the nation's hottest markets like Indianapolis. So let's talk about it for a little bit. So here's a couple things that you need to know as far as the big macroeconomics of what makes this such a special economy versus a lot of the other markets. So Indianapolis is right in the heart of the Midwest. Population, 1.9 million people. It is known as the crossroads of America. It is the number one pass through for highways as you're really crossing from east to west. Now, what's interesting about this location is that population is slated to grow at 15% year over year over year till the year 2050. Now, just think about that for a minute. An area like that is expected to get a lot of growth, whereas other areas are getting minimal growth. What does that growth in population mean? It always means we're going to need more houses. And it also means that we can't build them less than the cost to build or the rebuild value, which means what? As long as you're in an area that's always being forced to build more and more real estate, it's going to do what to the prices? What it did decades ago for New York and California and areas like that is it bumps up that price. Now, also what makes this unique is that it's an attractive market because the cost of living is 11% lower than other Midwest properties. It's also ranked in the overall Midwest the number one business climate, number 6 in the nation, which means that there's a lot of people and there's a lot of businesses. And when big businesses move in to areas like that in the Midwest, they bring with them part of that boom in population and part of that growth. So for all of those different reasons, that makes Indianapolis a really attractive market. Let's dive in though and take a look at some of the properties and what that means. Because I've got a team set up. I've got boots on the ground with one of my companies. And what they do is they'll go to the auctions, they'll use the MLS, they'll use all the systems, and they'll comb through all of the homes on the market, and they're going to cherry pick the very best deals. They cherry pick for me, my clients, and now they can cherry pick for you as well. Let's see what's so interesting about this. All right. So I'm up here on my website, and one of the things that I'm looking at is a 4-bedroom, 2-bathroom home. Now, this home is located at 263 Fenster Drive, Indianapolis, and the purchase price on this that we got it for and that we're making it available to our clients for is $122,000. Now, first of all, are we below the median? Yes, the median's around $200,000, $220,000. We're almost $100,000 below. What does that mean? It means that when the market course corrects, which by the way, economic winter will always come, it's part of the Kondratiev 3,000-year cycle. Real estate will step into that, but that affects things at and above the median. Something this far below the median, it's still going to be a cash cow. It's still going to work. This is a house built in 1974, a little bit of an older home, and we're looking at 1,588 square feet. Now, what makes this home attractive for me is that real estate, when I'm picking an investment property, it's not an emotional experience. My emotions are connected to my dreams, and my dreams motivate me. My dreams of helping people motivate me. Real estate, do not mix the emotions in there. Instead, what we want to do is we want to look at the numbers, and here's what the numbers dictate on this house. The average annual return on this is going to be 19.77%. Now that's huge if you think about that. And imagine compounding that year over year over year. You know, the stock market's trying to get a few percent a year. Your bank account's getting 0.00 whatever low percent, right? Inflation is working against those low interest rates at 3 to 4%, which means that if your money is earning 3 or 4%, then inflation is squashing that down to nothing, which is why those investments can't get you where you need to go. However, if you take a look at real estate here that's doing 19.77%, This is a projection. We're not looking back and saying this is a known because as a property it hasn't been purchased, but we're comparing it to thousands of other deals in our experience on the 3,500 homes we've done in the last decade, and we end up being fairly spot on when it comes to our projected ROIs. The other thing to note on this is what I call a cash on cash return. If I'm gonna put a 20% down payment, if I'm gonna buy this property, then just on my money, what am I gonna get? Not overall ROI, not growth, not that stuff, just what's my cash on cash return? By the way, I've shot another video showing you how to calculate that. It's one of the important numbers that I look at when I'm investing in something. And on this property, the cash on cash is 11.1%. That's after repairs, property management, maintenance, and things like that that are projected out vacancies. So if you look at that just on your money alone, 11%, and then your overall ROI just shy of 20%, that's one of the things that makes Indianapolis for us a really good market. Now, if you go to Indianapolis on your own and you're not combing through all the properties we are, you're not going to find ROIs like this unless you get lucky because we're combing through so much, but your ROIs on average will be better than if you were just to pick any random backyard, because I want to be in the 5 hottest markets in the United States at any given moment. Let's look at just one more property here. Okay, this is a nice, attractive little guy. This is a home built in 1999, so it's a fairly new home. This is a house that's a 3-bedroom, 2-bathroom. I really like that tree in front of the house. I like trees. I'm from Washington. And then the purchase price is $89,000. So we're under $100,000. Now look at how far below the median we are. And remember, we're never wanting to do a 2-bedroom or lower, so we're at that minimum rate. We're at an $89,000 house, 3 bedrooms. This is at 6147 Wildcat Drive, and this is a newer home. It's 1,368 square feet. Now on this little guy, the average return we're calculating is 15.69%. So again, we're crushing it. Imagine compounding that for 10 years. And then our average cash on cash return on this is 9.26%. Okay, these are fantastic properties. I'm telling you right now that if you're buying real estate like this and you compound it and grow it over 10 years with this short-term buy and hold strategy that we talk about so often on my channel here, then what it equates to for you is turning a little bit of money into a lot of money. Remember, there are no guarantees. There's no guarantees you'll even wake up and get out of bed this morning. But I'll tell you what, there is a guarantee in real estate that if you work and effort enough, and if you play it intelligently, and if you have the right team and the right system, that you will give yourself the best likelihood of success. Friends, that's today's episode on why Indianapolis as one of our nation's hot markets. If you want to learn more about Indianapolis and the other hot markets that we're investing in, or how to leverage my team to successfully invest out of state, compound that money and crush it, then click the link up here so that you can go to my website and learn some of the different options of how we can play together. You're going to see options for people that have money. You're also going to see options for people that started like me that don't have any money, where we're really not going to focus on out-of-state investing, but we're going to show you how to invest in the most meaningful way right now. Thanks, friends. Make sure that you subscribe, ring the bell, and we'll see you soon.